We're now going to talk a little bit about accrual accounting. And when we talk about accrual accounting, we can't talk about it in isolation. We have to talk about it with respect to something else. And the best comparison is cash accounting. And starting out with this, so let's first talk about what cash accounting is, and because that's the simpler of the two. And then we can talk about what accrual accounting is relative to cash. Cash accounting basically means that we record transactions, or that transactions are recorded, when cash is moved. I'm gonna say moved. Probably the more technical or correct way to say moved is has changed hands. It's gone from one party to another. So when I say, you're going to hear me say when cash is moved a lot, but what I mean is cash has changed hands. Now, accrual accounting is different in that the movement of cash is not the event we look for to record a transaction. Under accrual accounting there is a legal, so transactions are recorded. Transactions recorded when there is a legal right or obligation from one party to the next. So from one party to another. So the legal right or obligation is the driving event under accrual accounting. And under cash accounting, it's when cash is actually moved or changed hands. So let's talk a little bit about some terminology with respect to accrual accounting. So we're going to have, there's two words here I want to start with, and one is, we'll start with the word accrued. And accrued generally means that there is a legal obligation or right, but no cash is moved. Excuse me here, let me erase that T. But no cash has moved. Okay? Where we have a deferral is kind of the contrary to an accrual, and that is where cash has moved, okay? But in this case, there is also a legal obligation. And you can, or right. And so we know that we're going to record in an accrual accounting, we're going to record both accrued items and if I should probably write, to be consistent here, I shouldn't write of deferrals, I should write accrued, deferred, excuse me, accrued and deferred to be parallel. So cash is moved. There is also a legal right or legal obligation or right. And you can see the one thing that's consistent between these two is there's both a legal obligation or right in both circumstances. So we're in accrual accounting, we're going to always record accruals and we're going to record deferrals. And let me make this, throw out one additional item here, some terminology that's going to help us make this a little bit simpler. And that's the term realized, the terms realized, and the terms recognized. And generally what realized means is that cash has moved. So it's moved from one party to another, okay? Recognized generally means that an item is going to be recorded, or an item is, it's going to be recorded on the income statement. So in more specific terms, we're going to have a revenue or an expense. So we can have items, income statement. So if we want to take this then the next layer, when we start to think about deferrals and accruals, we can think about that accruals are items where cash is not moved, but we're going to record something on the income statement. Where a deferral is where we have something that cash has moved, but it's not recorded on the income statement. So let me see if we can make this a little more clear. An accrual is recognized but not realized. And that means it's going to show up on the income statement, but no cash has moved. Where, as opposed to that, we have a deferral. And what that is it is realized, cash has moved. Well, I should erase that. My handwriting on here has a little bit to be desired, and I apologize. We'll try to work on that. Realized, but not recognized. So with that, now we have some terminology. In the next video, we'll talk a little bit about the accrual grid, and we'll give some examples.